I've been investing in private mortgages secured against real estate for a number of years now. Even from the time I first started, my main focus has always been on the risks. I want to know how I protect my investment and get my money back in the first instance before I look at the potential return. So let's explore some of the key risks associated with private non-bank lending and how I and other investors navigate them. Firstly, the borrower. This is the first thing people think of when lending their money. What if the borrower can't pay me back? Well, we mitigate it in a number of ways. We are conservative with the valuation of the property and don't lend more than around 70% of its value. That means if the borrower had to sell the property, it would need to drop more than 30% in value for us to lose some of what we've loaned them. Another way we mitigate the borrower not being able to pay back is by having a clear, simple exit strategy up front. As part of a thorough due diligence process, having a plan of how the loan will be paid out means there is no guesswork when it comes time to pay back. Which brings us to our next risk, delays in paying back. This risk occurs quite a bit, but it's actually not that bad. A loan of 6 months may end up going for 7 or 8 months for perfectly legitimate reasons. If there are significant delays, we have provisions in the loan agreement to charge penalty interest, meaning the interest we receive goes up for the period. This incentivises the borrower to pay us back as soon as possible. So as an investor, you need to be prepared that your money may be loaned out for a little longer than originally planned. So long as you don't need it, being patient will mean you actually get a higher return in the end. The last major risk is problems may occur with the loan agreement and paperwork if it's not done by a specialist solicitor. We use a law firm that has been specialising in private lending for over 20 years, and they have seen it all. They literally wrote the book on private lending in Australia. So I'm confident the paperwork will be watertight. So as you can see, the risks primarily lie with the lender's control, which means as investors, we have more control over our investment and multiple avenues to go down should a risk materialise. So how good are the returns for investors in private mortgages? I'll discuss that in my next update. Until then, happy investing.